Okay, so did you guys have a good weekend? I went to the Georgia game and had a great time. So I hope did y'all watch a lot of football? Anybody? Yeah. A good day for football on Saturday, as far as I was concerned. A lot of people lost that I was happy to lose, you know. So today we're going to finish up chapter 5 and kind of do the second half of chapter 5, which is the statement of cash flows. So the statement of cash flows is a statement that you might not be familiar with too much, or maybe you haven't had to do one too much, but it's one of the important parts of the chapter because this chapter has to do with the balance sheet, which is classification. That part is really more or less simple, just knowing where things go on the balance sheet. But this is maybe something in the chapter that'll take a little bit more effort to learn all of this. So, and then on the test, there's 3 main things that we've gone over. We've gone over income statements, including multi-step income statements and like extraordinary items and discontinued operations. That's one thing. Then the other thing is the balance sheet. Then the other thing is a statement of cash flows. And you're going to probably have a blank sheet of paper where you do something on there, and maybe I'll leave it to your imagination as to what things are going to go on there, because now that we know the 3 most important things, right? Statement of cash flows is a big contender for that, right? To have to know how to do that top to bottom. Okay, so what we're going to do is go over what's on the statement of cash flows, then y'all are going to do an example and follow along as we do one. But in the first part of today, we're just going to go over what goes on the statement of cash flows and what it's about. So on page 229, they have a summary of what the statement of cash flows is about. And there's a box there in that summary. The main idea of the statement of cash flows is to try to reconcile what's happened to cash, what has happened to the company's cash. And you can see in that box we have the net increase or decrease of cash is the at the bottom. At the bottom we have the net increase or decrease of cash. And we have 3 things that are going to add up to the net increase or decrease of cash, okay? And those 3 things are operating, investing, and financing activities. See that? And then so we have the net increase, these 3 things, operating, investing, and financing activities, add up to the net increase or decrease in cash. And then the way that bottom section goes is we have cash at the beginning of the year and cash at the end of the year. So we're going to add this plus this. Okay, so 1 plus 2 equals 3. This is how this goes down here. This net increase in cash, add that to the beginning of the year cash, and you're going to get the end of the year cash. So these 3 things add up to this number, and these 2 numbers add up to that number, okay? So that's the idea. That's kind of like the overall flow of what the statement of cash flows looks like. So let's talk about why do we have... Yeah, I don't really like that whole... Let me change this for a second. Now maybe we'll just orient ourselves over here. How about that? Okay. Okay, this works. Okay, so why do we do the statement of cash flows? Because we want to see what has happened to our cash. Who really wants to see that? The investors, the ones looking at the financial statements, because their primary consideration is what what kind of future cash flows can they expect? They're looking at what kind of future cash flows they can expect from this company. So the statement of cash flows is actually very important to them because it kind of reconciles the information that they find on the income statement and the balance sheet with actual cash. Because the income statement is done on the accrual basis, right? And the reason it's done on the accrual basis is to smooth out things and to be more, theoretically accurate. But the statement of cash flows gives them additional information that they might expect cash-wise. Okay, so that's why it's important. Now, so these three sections, what we're going to talk about today is what is in these three sections. Remember, they're the operating, investing, and financing sections. Okay, and so it's really important what the order of this is: operating, investing, financing. A lot of times it might be hard to remember which comes first, right? What order these come in. So I like to come up with little ways to remember that kind of thing, and maybe you do too. So my way for these is oil is free, okay? Just to remember, it's easy, to be honest, to remember that the operating section is first. But the order of these two, sometimes it's hard to come up with for me. So oil is free, and that way you can remember which one comes first. Matter of fact, like when you study for the CPA exam, they give you a lot of tips like this. And maybe y'all had one of these with debits and credits and assets and liabilities. I don't know, some people teach it that way. Have y'all seen anything like that? Memory devices? No? Okay. All right. So anyway, those are the sections. Now, so operating activities, I think you can kind of get the idea of what those are, what operating activities are. Operating activities are from a company's primary operations. What's the main source of cash from a company's primary operations? Revenue, right, which is found on the income statement. So the way that we do it on the statement of cash flows is we put net income in this group, okay? So net income goes in this operating group, but as we talked about before, the income statement is on the accrual basis, so we have to transform net income into a cash basis net income. So there's some things that are on the income statement that are not, that don't involve cash. And so there's adjustments that we have to make for those things. What are those, maybe? Things on the income statement that don't involve cash. Now there's some things on the income statement that involve cash. Like you said, revenues, right? Revenues involve cash. Yeah, sometimes. They might involve accounts receivable also. But one item that's on the income statement that does not involve cash is depreciation. When you buy a piece of equipment and depreciate it, the actual cash part of that was when you bought the piece of equipment. The depreciation doesn't have any cash part. Okay, so I think what I'm going to do is we're going to do an actual statement of cash flows with no numbers, and you can see how it flows through. So it's all written on this piece of paper. You might wonder, well, why don't I just copy that piece of paper? I'm now thinking this, and give it to you, right? But that would you writing it down will be helpful, and I'm going to write it on the board as we talk about it. So this, it's kind of in the book in a way, but okay, so we'll talk about it. All right, so the statement of cash flow starts out with a heading, the company name, and the name, the statement of cash flows, and then the date is for the year ended. X, okay? And then the first thing, as you see on page 229, it's cash flows from operating activities. That's the first section. Cash flows from operating activities. Okay, so now we're going to have a whole big section of what goes in this cash flows from operating activities, which this is kind of the hardest section to come to grips with, okay? The first thing in this section is net income. So for this number, you're just going to look on the income statement and find out what net income is and plop it down there, okay? This comes straight from the income statement. Okay, so the next section is adjustments to reconcile net income to cash flows from operating activities. Okay, so now this whole section is going to be a bunch of adjustments to get net income to a cash flow number. Okay, so our goal is to get this net income number to a cash flow number down here. Okay, so the first thing, always, the first one of these is the one that I talked about first, which was depreciation expense, right? So we're just going to come up with a list of things, depreciation expense being the first one. Okay, so now the thing on the statement of cash flows is whether you add or subtract something. That's one of the key problems that you have in the statement of cash flows. So let's just think a minute about what we would do to depreciation expense to get it back to a cash flow basis, right? So we have net income here. Net income, if it's a positive number, would be an inflow to us of cash, right? If it's a negative number, like if we had a net loss, then that's going to be on our statement of cash flows as a loss. So throughout this, I'm going to say if we have a positive number, it's going to be positive like this. If we have a negative number, it's going to be negative with these brackets, okay? So a net loss would be a negative number. Okay, so what do we need to do to depreciation? Let's think about our income statement. On our income statement, we have revenues minus expenses. Here's all of our expenses. Depreciation is one of our expenses, you know. Revenues minus expenses equals net income, right? We want to take depreciation out of here, remove it from the income statement, more or less. So what do we want to do? Add it or subtract it? We have 2 votes for add it. 3 votes? Okay, add it is right. Okay, add it is right. We want to add it back here to get it. We were subtracting it right here, right? It's one of these things we're subtracting. So we're going to add it back to our net income number. We're going to say net income plus depreciation is going to give us this other number, okay? So do you see why we're adding it to, it was subtracted, we're going to add it back so that now this net income number is going to be what? Bigger, right? So we're going to add depreciation expense. So I'm going to leave that as a positive number, okay? So there's some other things that are on, well, sometimes on the income statement that are like depreciation, and that is amortization expense. So fixed assets like property, plant, and equipment are depreciated. Some intangible assets are amortized. Okay? Now, some of these things are written down in your book in kind of a different format. So the key thing that I'm doing up here is to help you with the plus and minus part of it and kind of the philosophy behind these, okay? The next one is sometimes on your income statement you have something, a gain on the sale of fixed assets, okay? Is up here in the gains, or a loss on the sale of fixed assets. is a loss, okay? Now what we want to do is to take these off of our net income, okay? So the way that we're going to do that is with our next adjustment, we are going to have a gain or the loss on the sale of fixed assets. Do you know what I mean by fixed assets? Fixed assets? What's that? So what's an example of a fixed asset? Piece of property. Property, plant, and equipment. Land, buildings, anything that anything that you depreciate, basically. Fixed assets, okay? So now, remember, gain is up here, loss is down here. How are we going to figure out which one we add and which one we subtract? Okay, so the loss is like depreciation. You're going to add it, right? So loss you're going to add, gain you're going to subtract. Okay? Does that make sense? Okay, now we're coming to another sticky wicket, all right? On our income statement, we had revenues, which included, sales revenue, right? Sales revenue. Now, sales revenue, sometimes we sell things and we get cash for it, right? Other times we sell things and we get accounts receivable for it. So sales revenue is not really on the cash basis, right? It's more on the accrual basis. So somehow we're going to have to get a lot of different items on the income statement, like sales revenue or insurance expense or a lot of other different kind of things. We're going to have to get those to the cash basis. Okay, so the way that we're going to do that, this seems kind of a weird sideways way, but we are going to look at the change in our current assets and current liabilities. So in this section here, we're going to include something for the change in our current assets and current liabilities. When I mean the change, I mean from the beginning of the year to the end of the year, how much did our current asset change? Okay, so for example, if we're looking at accounts receivable at the beginning of the year, let's say we had accounts receivable of $1,000. And then at the end of the year, we had accounts receivable of $1,500, right? So our change is $500, our change in accounts receivable. Now, are we happy about the fact, let's put it more like, is our bank account happy about the fact that now people owe us more money? Okay, what impact did that have on our bank account? Think about it as fewer people are paying us, right? Our accounts receivable is building up. So instead of buying with cash, our accounts receivable is increasing. So is that kind of a good thing for us that our accounts receivable is increasing? Or what is that doing to our cash? So now we're going to look at whether we had an increase or a decrease in current assets. This is our next one. Increase or decrease in current assets. If our accounts receivable increased, this is kind of harming our cash. It kind of caused our cash to go down. Okay, so what do we mean by current assets? Let's get this straight. So current assets, if we had to list out the current assets that we're talking about here, what kind of current assets are we talking about? We're really talking about accounts receivable. So we studied current assets at the beginning of the chapter, right? What else do we have? Current assets? Anybody?
What example?
Yeah, examples.
Rent receivable.
All right, okay, so any kind of receivable.
Supplies.
That would be like an inventory item, any kind of inventory item. And prepaids. These are our main kind of current assets, okay? So now what I mean by while we're listing these out, if our accounts receivable increased, we're going to subtract it. If our inventory increased, we're going to subtract it. If our prepaids increased, we're going to subtract them. If they instead decreased, we're going to add it to this number, okay? Now this is the one that's really hard to remember. How are we going to remember that? I don't know. The way that, this way right here is the best way that kind of, makes sense to me. But there might be some kind of, memory thing that you can think of. Well, there is one more way, and when we go over the problem, then we'll go over that way that...
So if any of those increase, we automatically
Subtract them. Right. Okay. Now we're going to have the same thing with current liabilities. We're going to have increase or decrease in current liabilities. So when we think about current liabilities, what current liabilities are we normally thinking about? Accounts payable is like the main one, right? Accounts payable or any kind of other current payable like that. And then another one is unearned revenue. Okay, so, and then any other kind of current liability. I'm just naming for you kind of the most popular ones, okay? So we've got one of these is going to increase and one is going to decrease on our statement of cash flows. So one of them we're going to add and one of them we're going to subtract, Okay, what do you think? Same as current assets or opposite to current assets? Opposite, because they're like on the opposite side of the balance sheet, right? So that's how this one goes. Okay, so this is kind of our list of the adjustments that we have to do for cash flows from operations. Now the way this goes is we put our income statement number here. We put all of our adjustments over here in a line and we add them up and get a total adjustment, and then we get down here net cash provided or used by operations. Okay, so let's just think about the verbiage here. If we add these numbers and this number and we get a negative number, what does that mean? That means, if this number is negative, that we have used some of our cash in operations. Like maybe we had a net loss. We had to fund our net loss with some of our cash, right? So the idea is what has happened to our cash. That's what we're looking at on this statement. We've used some of it in operations. So if we have used some of our cash in operations, it's a negative number. If instead, like right here, we have a positive number, if this number is positive, then this is net cash provided by operations. So operations has provided money for the rest of our business. What is the rest? Investing and financing activities. The rest of the activities of our business. And it has helped our cash either increase a positive number or decrease. See, our ultimate number right here, this number right here, could either be positive and it would be an increase, or it could be negative and be a decrease, okay? So what we're trying to come up with is these three things added together to either get a positive or negative number. Alrighty. So now we're going to go to the next two sections. So we did operating, oil, right? Now we're going to do is investing, right? So we're going to do the same, we're going to have the same kind of title, cash flows from investing activities. Okay? So when we say investing activities, what we're thinking about is ways that the company has invested in something to grow the company or to improve the company in some way, okay? So on page, the book kind of scatters these sort of things around and doesn't give it all to you in one place, to be honest. But one place it tries to put this is on page 230, where it gives you a list of investing activities. This little diagram. So it's telling you that investing activities have to primarily, they have to do with property, plant, and equipment. Okay, so the company, the one way that it invests in the future of the company is to buy property, plant, and equipment. Like, let's say, for instance, building a building to produce its widgets is a investing activity, okay? So let's say the first one is the sale or purchase of property, plant, and equipment. Okay, so I've gone ahead and put the brackets around purchase. So why is that? When you're purchasing this fixed asset, you're using cash. Cash is going out. So outflows are the things that are, from here on out, it's a little bit easier to see what's positive and what's negative. Outflows of cash are negative. Inflows of cash are positive. Okay, so when you sell a piece of equipment, you get cash. When you buy a piece of equipment, you spend cash. So that's the positive and negative thing of it. But there's one little weird thing on the property, plant, and equipment part, is that when you sell a piece of equipment, you have a gain or a loss on the sale of equipment. Remember that we had it over here? Gain or loss on the sale of fixed assets. Okay, the thing that goes here is the amount that was on the income statement as the gain. Okay, the thing that goes here, see, doesn't this seem kind of repetitive? Sale or purchase of property, plant, equipment. The sale, when you have a sale, it's kind of, there's a gain or a loss involved. But the thing that goes here when you sell a piece of equipment is the actual cash proceeds. This is the number that goes right here. Okay, so this is going to be a little bit weird, okay? Let's just go over how the sale of a piece of equipment works. When you buy a piece of equipment, let's just say you have an automobile. You put it on the books at its cost basis, right? And then you have an accumulated depreciation amount. You depreciate it and you have accumulated depreciation. So your cost minus your accumulated depreciation is the value on the books. And people call this the carrying value, okay? This value, cost minus depreciation, this is what's on the balance sheet, right? The carrying value is this value on the books. Okay, or sometimes people call it the basis, okay? So the basis is the cost minus depreciation. Now when you sell your sales proceeds, this is the cash that you get, the sales proceeds, let's just call this cash out here. If you wanted to figure the gain or the loss, you take your sales proceeds and subtract your basis to get, subtract your basis to get your gain or loss. Okay? Yeah, I don't know where this is going to go where everybody can see it. We'll move it around a little bit. So you see what I mean? There's going to be a gain or loss that's figured by taking your proceeds minus your basis, which is this right here. Your proceeds minus your basis equals your gain or loss. Your gain or loss goes on the income statement, remember? So where did the gain or loss goes on the income statement. These two things, the sales proceeds, this cash goes up here. And the gain or loss, see, this gain or loss is what goes over here, right? And this basis, this was on the balance sheet. All of this is on the balance sheet. Okay. So this is real important to get straight, that the cash proceeds go up here on the sale, and the gain or loss goes over here, reconciling net income. Since this goes on the income statement, we're adjusting what's on the income statement to get it to the cash basis. Okay. Okay, so are we good on that? And we're going to, a sale we're getting money for, a purchase we're spending money for. Okay, so that is one of the investing activities. Another is, the other things are less important, to be honest with you. They occur less often. But one is the sale or purchase of debt or equity securities in another company. So what are we talking about that? Debt or equity securities are stocks or bonds in another company. If you were to buy stocks or bonds in another company, why would you do that? Why would you want to buy stocks or bonds in another company? This is just an investment for your company, okay? Your company is investing in another company. Okay, so instead of investing in property, plant, and equipment, they're investing in this, okay? And then another example is, and this is even less frequent, the collection or the disbursement of loans to another company. So you're loaning another company money. Okay, so the total of all these is net cash provided or used by investing activities. Okay, so the total of these three things. Net cash provided or used by investing activities, where provided is your positive number. So if you have a positive number, this should be your, subtotal down here. If you have a negative number, you should use used, okay? You're either going to use one or the other of those, provided or used, depending on the sign of the number, okay? Now the next one is in our oil is free thing, is financing. Cash flows from financing activities. Okay, so financing has to do with how the company finances its operations. So a company can, in general, finance its operations in one of two ways. Like, financing means obtain capital for use in the company's business, right? And we've talked about this before. What two ways does the company normally obtain capital to grow? Bonds, okay. So it can issue bonds or it can issue stock. Okay. So the things that go in this section, in the financing section, have to do with stocks and bonds, or debt and equity, right? Debt and equity. Okay. So we could issue stock or bonds. Okay, this is one way. We could issue stock or bonds. Is this a positive thing for our cash or a negative thing? Was our cash increase when we issue stock? Yes, because they're going to give us money. Stockholders give us money. So this is positive. Issue stocks or bonds, all that's positive. If we issue bonds, that's positive. The people that buy the bonds give us the money. Okay? Now, what do we do in return for the stockholders? We pay them dividends. Payment of cash dividends. And when we pay them dividends, that has a negative impact on our cash flow, right? And what's our negative impact in the bonds? That's when we redeem the bonds. Redemption of bonds. That's when we pay back the bondholders. Okay, so those are our positive and negatives on the financing activities. So we have net cash provided or used in financing activities. Okay, and then at the bottom, this stuff right here goes down at the bottom. These, net increase or decrease in cash, cash beginning of the year, cash end of the year. Okay, that's what goes down here at the bottom. Now, in doing a statement of cash flows, what I like to do is to do the bottom first. This bottom over here, I do this part first, because if you do this part first, this is real easy. What's our cash at the beginning of the year? What's our cash at the end of the year? What's our change in cash? And our increase or decrease in cash, this is the answer to the whole problem. Here's our answer, because these three things add up to this. So if, in this way, we're getting our answer first, right? And then when we add these three things up, if they come up to this number, then we're done, right? We're good. If they don't come up to that number, we have a mistake somewhere. Okay, so what we're going to do is do a worksheet using these things. Okay, so the worksheet is problem 514, exercise 514. So that's on page 265. So the cool thing is that I've kind of done all the writing already. If you know the format of this, then you can just kind of fill in the blanks. But there's, this problem is really simple, because how many assets do we have? 4. How many liabilities or equity things do we have? 3. Okay, so this is just a very simple problem, right? In practice, these problems get much harder, okay? So the way that you do these problems in practice is to have a worksheet. So that's why I gave you the worksheet at the top here with fill in the blank stuff. See that? So what I've done is I've put the beginning balance and the ending balance of every account. It doesn't look exactly like they have it down there. Because on these worksheets, I like to put them in a different order, where beginning balance is first, ending balance is last, and there's a place in between to put the change. Okay? So just to show you what I'm talking about, we're just going to kind of go through the worksheet. Cash, accounts receivable, equipment, accumulated depreciation. So our cash had a beginning balance of $13,000, beginning balance, and then we have a debit. Oh, this is bad. We're going to have to move over. Cash, accounts receivable, equipment, accumulated depreciation. All right, we're just going to go in round numbers. How's that? Our beginning balance was $13,000, right? We had either a debit or a credit, and then an ending balance of $45,000. Okay, you see what I mean? So did our cash increase or decrease? It increased, right? It increased by $32,000. And what if it increased? Does cash increase with a debit or a credit? A debit. Okay, so really it increased with a debit of $32,000. See what I mean? Okay, so our cash. Yeah, we're not going to fool with the statement yet. We're going to get this part right. Okay. So our cash increased with 32. Our accounts receivable went from 88 to 91. Equipment from 22 to 39. This went from 11 to 17. Y'all go ahead and fill out the debits and credits part of this, okay? Okay, you see what I mean? Like accounts payable went from 88 to 91. So that was an increase of 3, and that would be a debit, okay? So just keep going all the way down. And what we want is for your total debits to add up to a number and your total debt credits to add up to a number, okay? That's our goal. Avery, do you need a pencil? Okay. Yeah, I was trying to think why you weren't. Then I thought, he needs a pencil.
Thank you.
Uh-huh. So when your debits and credits equal, Jillian, do yours equal or are they unequal? They're equal, okay. You looked puzzled by them, so I couldn't tell. There was no smile. So Kyle, how are you? They equal?
Yeah, I got it.
Okay. So Avery's equal? Okay. How are you guys doing? Equaled out, Brett? You're getting there. Okay. Equal? Okay. All right, we'll give y'all another minute. Do you have one column equal? No? Okay. No, we hadn't added yet. Okay. Okay, so let's fill these in, okay? Equipment increased also, right? And so its increase was 17,000. And accumulated depreciation increased, right? And its increase was 6,000. So would that be a debit or a credit? Okay. Yeah, credit. So Chica, I think that might be you. Okay, that's one thing on yours. Okay, so now there's no need to get a total right here. No need to get a total of this number. All right. What we're doing is just getting a total of the total debits and the total credits. All right. Now accounts payable increased from 15 to 20. Would that be a debit or a credit? Credit. Yeah. Okay. And then common stock increased from 80 to 100, so that's a credit. And retained earnings increased by 21. Okay? So that should be all of our numbers, right? So we can add those up and get a number here. Now the thing is, let's just look at retained earnings for a second, because at this point I like to fix what happened in retained earnings. What did happen in retained earnings? They give you in the problem what happened in retained earnings. What was it? Net income of 44, right? And dividends of 23. So this is really how retained earnings got that way, right? Our net income is a credit increase to retained earnings, and our dividends are a decrease to retained earnings. Okay, so 17 plus 44 minus 23 equals 38. Do you see what I mean? Because, remember, retained earnings is beginning balance plus net income of 44 minus dividends of 23 equals 38. So this number is our dividends. This number is our net income. And those numbers came from the problem. And see how I have them written up here at the top? But they were given in the problem. So in the problem, it tells you what the net income was and what the dividends were. It's not going to be in the, list of things. And they're going to give you other items in the problem that tells you what happened, like how this came to be, okay, how all of this came to be. So now really, then we can add these things up. And where you added them up before it equal, now it's, still going to equal, right? It's just going to be a different number here. And now it's going to add up to 75, right? Okay, so now after doing this, then we really have all of the information for our statement of cash flows. It puts it in a much better format, to do this worksheet, especially if we have some kind of very complicated balance sheet, which we don't have here. But if we have a very complicated balance sheet, then it's really helpful to have a worksheet with debits and credits. Okay, so let me just say one more thing about the debits and credit columns here. This number, this 32, what number is that? The increase in cash? That number is our what? Our answer. That's the answer to the whole problem, this number, okay? Remember, this is the number that goes down here at the bottom. So we're going to do the bottom first. Net increase in cash is 32, right? And our cash at the beginning of the year is 13. And our cash at the end of the year is 45. Okay? So see how now we know the answer to our problem, right? What three things are going to add up to 32? Those three sections: operating, investing, and financing. The totals of those three things is going to add up to 32. Okay? So, usually I go backwards in this thing. I think I'll go frontwards this time, though. Okay, we'll do the operating section first, right? We'll do the operating section first. And in the operating section, we're going to put, we're going to go down the line and see if we have any of these things here, right? Now, so are there any questions about, first before we go on, this section right here or this cash part at the bottom? Y'all are all straight about that? Okay. Okay, so in the operating section, we're going to start with our net income or net loss, which they gave us, right? Our net income was 44. Well, actually, let's put it right here. 44. Remember, we're going to put our net income number here, and then we're going to get some kind of total of all of our adjustments, all of these adjustments, and then we're going to get cash provided or used by operations. Okay? So do y'all want to give that a go, or maybe we should just go through it? Y'all can plug in depreciation, right? Depreciation comes first. Depreciation expense, and we're going to add that, right? And that is what? This number. Right? This is how our accumulated depreciation got from here to here. We had depreciation expense. Our accumulated depreciation went up because we had depreciation expense. Okay, so we're going to do what to our depreciation expense? We're going to add it back, right? We add back depreciation. Okay, so now you can almost go down the line. We've used the 32, right? We've used the 6. We're going to use all of those numbers and as we go along. And another little key to the way that we do things is look at the top where it says debit. The debit is a use of cash, and the credit is a source of cash. Okay? So what do I mean by that? The source is cash inflow, and the use is a cash outflow. So everything in this column will be a positive number on our statement of cash flows. Like depreciation is in this column, and it's a positive number. This is the other way to remember whether things are positive or negative numbers. Okay, so we've used, what else do we need to do in our operating section? What else do we have? Which one of our numbers? Avery, you got one?
Increase in accounts payable.
Okay, excellent. Increase in accounts payable. Our accounts payable increased, so that's going to be a positive or negative number?
Accounts receivable will be a negative.
Oh, accounts receivable, yeah. Accounts receivable is a negative. Okay, so we're going to say that our accounts receivable current asset is a negative number, a -3. We can check that off, right? And accounts payable would be a +5. Okay. Okay, so see how that went? Here's our 5. Anything else in operating? Avery? Are you good? Are you good?
Stuck there.
Stuck there. Okay. We're done there, actually. So that's good. So we get a subtotal. This is supposed to be in another column. All right, here's our 44. Here's our subtotal, which is 8. So our net cash from operations is 52. So this is a positive number, right? So this is net cash provided by operations. That's what we would say, net cash provided by operations. Okay, so now we're going to go to the investing activities. And investing activities would be if we sold or bought what? Primarily equipment, right? Or property, plant, equipment, land, equipment, stuff used in the business. And did we do that? Yeah. How do we know that we did that anyway? Jeremy, do you have any idea how we know we did purchase some equipment? It's a positive number. Our equipment went up. It's a positive number. We bought equipment right here. Now, it didn't really give us that in the problem, but that must be what happened, right? We must have bought some equipment, okay? So we bought $17,000 worth of equipment. So purchase of equipment, 17. Is that, Jeremy, a positive or negative number? Negative number. And we know that, because of this right here, and because of thinking about it, we used our money to do that, and because it's in this column right here, it's in the debit column. All these things are negative numbers, okay? All right, so our net cash used in investing activities. Let's put that, okay, it goes in this column over here. I think y'all get that. Okay, I'm kind of getting a little bit. All right, the next section is our financing activities. And finances have to do with what? Stocks and bonds, okay? Did we have any stock or bond activities? Angela, you want to help us on this one? And yeah, what did we do with common stock? Okay, it was, we are going to add it because it's in this column. What happened to our common stock? Did it go up or down? Our common stock went up. So what did we do? We issued common stock. We sold some common stock, right? And we call that issued. Okay, so we issued stock, not bonds, but we issued stock, and that was for 20,000, right? Okay, we can check that. What else did we do, Angela? Or any of your helpers back there? Anybody want to help Angela? Dividends. We had dividends, right? Yeah, we paid dividends. How much dividends did we pay? 23, right? So we can check that off. That's going to be negative because we spent our money to do that, right? And so this whole thing of financing is going to be a negative number. This is going to be a -3. See that? So these are the numbers that we're going to add up. This by operating, this number, this 17, by investing, and this 3 in financing, right? So we're going to add up those 3 numbers and hope that it adds up to what? 32. Because our answer is 32. And are we good? 17 is negative. Yeah, so we're good. It adds up to 32. Okay. All right, so that is the statement of cash flows. Any questions about that?
So it'll be net cash provided by used financial activities?
Net cash used in financing activities. Right. Net cash used in financing activities. Right. And net cash used in investing activities. Yeah. So now, this is what I'm wondering. Could you do a statement of cash flows? Right this second. everybody's, little more practice, right? So when is the next time you're going to have to do a statement of cash flows? Homework. And when is that due? Is that Wednesday? Then what else happens Wednesday? We have a quiz Wednesday. What might happen in the quiz? Statement of cash flows. I mean, most likely, right? Now, the homework, that might be one matter because you can look all through your book and find out whatever you want, right? The quiz, that might be another matter. And then what's the time after that you might have to do a statement of cash flows? The test. So do you see what I mean? Like you're going to have to do one for homework, one for the quiz, and one for the test. And in those last two, you're going to have to know it, right? So I guess my thing is maybe not wait till the last second to do the homework, and don't just learn it well enough to do it for the homework while you have all your tools in front of you, right? So learn it enough to where you can, what's the quiz likely to look like? This, okay? It's likely to look like that, but maybe not be quite so simple, you know? It's maybe going to fill in a couple more blanks here, you know? So, I mean, here, we really just didn't have many things filled in. But, I mean, the same accounts receivable and inventory and prepaids are all treated the same. So, now, how could you go about learning a statement of cash flows? What would I recommend doing? I would recommend doing some of the practice exercises. Okay, it's really to learn this, staring at the paper is not going to help you learn it, right? It's actually doing it. Doing one of these several times. Like, you could even do this one that we just did, do this one on your own to see if you get it. You know, try to do it without the book, or try to do it on your own without the piece of paper to work by, you know? Or try to do some of these others. Now, I think on the syllabus, I gave you, meant to, kind of mention this before. You might be wondering, well, what are all of these, these things on this list here are things that I consider to be like key problems, to be honest. So in chapter 5, there's some exercises 1, 2, and 3, and 15, and some brief exercise. You know, you might look through there and see a statement of cash flows and see which one, you might want to do. Kyle.
Yeah, you said we might have a problem like this on the quiz, but on the test,
Blank sheet of paper.
It's pretty, yeah, okay.
Yeah, here's your trial balances. Here's 2 trial balances, and it's a blank sheet of paper. And same for the, if you were to have to do a balance sheet or an income statement, a blank sheet of paper.
Would that be on the quiz?
Wait, now let's see. Let's review. There were 3 important things, and they were balance sheet and statement of cash flows. I would say we're going to at least have 2 of those, because we got to keep busy the whole day, right? So yeah, we're going to have at least 2. And on the test, we might have 2 also. It's possible. Okay? Yeah. All right. So now, don't forget to turn in the homework and come ready to do the quiz. It's where you remember how the quiz goes. You get into groups, you do the thing, and turn it in, right? Okay, good.